Hello and welcome to the trade setup. In this video we are looking at Intel. It is time for another update, and this stock just seems to be going up, and I'm sure a lot of people are frustrated. Maybe because they didn't buy Intel at all, maybe because they didn't buy enough. So I would actually go ahead and ask you, where do you think you should have bought Intel? Would it be here at the breakout? Well, sure, that's a strategy plenty of people use. Maybe here after this retracement. Another option, but there are actually some issues here. Maybe anywhere in this entire movement to the upside. Hindsight is king after all. Well, I would actually argue that the time to buy Intel would have been much earlier in this overall wave 2 correction, because this support zone would have been available ever since the wave 1 had topped. Yeah? Since 2020, this support zone would have been available to track a 3-wave correction into it and to accumulate within this area for the reversal to the upside. And obsessing over this missed opportunity is not gonna help bring it back. In fact, it's gonna make you miss some of the other opportunities that are currently present in the market, and the market has been quite generous lately. I have identified several opportunities. Some of them I have even presented on YouTube. For example, we can bring up Encore Energy that would be building a similar opportunity to this. It would be with similar risk-reward ratio. But if you want to work on this with me and get access to all the opportunities I find on the market, send me an email and we can take it from there. It should show up on the screen right now. And now let's actually discuss some more about Intel, because even though it has already run, this doesn't mean the opportunities are fully gone. It just means we might need to be patient a little bit longer until we are provided a trade setup that is actually worthwhile. So in this structure, we have been looking for a potential larger wave 2 correction, right? We have been looking for the confirmation that would have provided the same structure as the larger 1-2 setup on a smaller scale, and that would have been another opportunity to enter. Sure, sometimes it doesn't happen, sometimes we don't actually get to these support levels, sometimes it just runs and these opportunities can be missed, but if they are not provided, I would generally find it more likely that they wouldn't have been worthwhile anyway, because the risk would have been tremendous. For example, if I were to buy in this area, I would have had to assume a risk of, let's see, let's actually draw this to identify the potential risk needed for this setup. I would have needed to allow from the bottom of this correction the price to go down beyond 45% before I would have actually had a confirmation that the structure was going to fail. Above that, it would have been just as likely to actually extend to higher prices. In fact, if it were to reach the 38.2% retracement at the very least, it would have been the second degree confirmation that this as a 1-2 setup would have actually fulfilled its expectations, that the wave 3 to the upside would have been expected to start. So assuming such risk is not favorable, we don't actually do that. Now, this will not work out for Intel anymore, because the wave 3, I would really expect it to be ongoing if it is to ever build, and while the ideal target remains just under $200, based on the current structure, I wouldn't be surprised at all if it manages to far exceed this level, because I am still not able to identify a larger, more clearly complete wave 3 to the upside. Right? We have actually broken above the channel, the momentum has increased, it didn't get the break back down, and we have been looking for this to potentially build a wave 3, and the larger wave 4 correction would be an opportunity, and would still be in the future, because at this point, even this wave 3 seems overwhelmingly incomplete, especially if this structure is to build an impulse, which is the primary expectation at this point. So I won't even go too much into the overall structure in this area. I could, for example, consider this to have been something like a series of 1-2 setups, and right now, yeah, we could very well still be within a wave 3. In fact, even internally, within this structure, I could see a series of 1-2 setups take place, and yeah, this would be my current wave 3 to the upside. So we go on the smaller time frame, and within this structure, we have a bit more clarity at this point than we had in the previous video, but even now, the structure doesn't seem quite complete. Even now, I would still need a larger wave 4 correction to get more clarity on the structure of this chart. To me, it is perfectly possible that this as a larger wave 3 would be complete, in which case a support zone could extend significantly lower than what we have here on the screen. It could go as low as $93 basically, but unfortunately, I actually still see it possible for this wave 3 to extend in not so clear manners, where I could argue that even this as an internal wave 3 to the upside would still be extending to higher prices, but the minimum expectation to even consider an opportunity on this chart for me would be to reach the 23.6% retracement, $116. Unless this happens, I could see it very easily possible for any of these waves to basically be extending to higher prices. I would probably stick to this area of a double 1-2-1-2 setup here, but beyond this overall structure is still very much developing. I am watching closely this channel. I do want to see if we manage to finally get a break below instead of having the momentum still be increasing, but as long as it still is holding, I could see another bounce off of these levels into additional highs. I wouldn't personally be trading this, and if you do want to be trading such high cap stocks that still have room to run, I would recommend Micron to be the choice at this moment, as the pattern is significantly more clear and can provide significantly more reliable trade setups. I have covered it in a video very recently, and in this dynamic market it actually already needs an update, but overall, the pattern we are tracking there is significantly more reliable in my opinion. So, on this chart, I will be waiting for a larger retracement, I will be waiting for more clarity, and personally, again, I don't see a rush to be trading this. There are plenty of other opportunities on the market. I have already identified them, I have presented some of them on YouTube, and I would grade them much higher anyway, in terms of risk, in terms of reward, in terms of potential, and not because I do not expect Intel to still be growing, but because the clarity is not here. And even on Intel, there is actually a path where we might see a broader failure, and if we were to actually fail holding this larger area of support down to $92.8, it would be a quite great warning sign that they may be materializing. I don't see this to be a threat just yet, but it is something to keep in mind. There is plenty of risk on this chart. We are at all-time highs, the path down is quite brutal, and there are plenty of better opportunities. And for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.